And welcome everyone to another Smart Money Circle episode. I'm Adam Sarhan. With me today is Eric Franklin, who's the managing principal and co-founder at Prospero Wealth. Eric, thank you so much for taking the time and welcome to the Smart Money Circle.
Thanks so much, Adam. I'm excited to be here.
So, Eric, I always like to ask, can you please tell us your story and how you got to where you are today?
Yeah, thanks. My story's a little bit novel, I think, in the investment advisory space. I come to investment advisory not out of the financial services industry, but from a long tech career. So I worked for 23 years, largely in big tech, mostly at Amazon for 18 and a half years, but in a number of different startups as well. Kind of in between. I just kept returning to Amazon. Um, and basically, like, I've always been interested in personal finance and my own financial planning and my own investments. Um, but, what I saw was just that it became something I started just helping coworkers and friends and family with more naturally through the years. And that kind of culminated in 2017 when with my former advisor, we decided that we were going to set up an entity where we could help friends and family that in some cases we were already helping, but they had asked to be able to pay us. And so that's kind of where Prospero Wealth was born. 2017, we started it up. I disclosed it to Amazon, just said, hey, I'm doing this on the side. I'm just helping people. And they were okay with that. Um, and really what happened was, that just kind of cemented my love for the space, and I started to learn a lot, and then I started attending a lot of, sort of educational opportunities, added financial planning in 2019 and really realized, hey, there's a lot of things we can help people with, and develop really meaningful relationships with people and yeah, and so eventually that led to me making a decision in 2021 to focus on this full time. And that's really when things blew up. The minute I left my tech career, that's when all my former colleagues came out of the woodwork, and started asking to work with us. And we started developing, real expertise in some of these problem areas for tech professionals, concentrated positions, and um, we find a lot of people want to move on to a kind of a second career in their lives, or take a sabbatical. So we have a lot more expertise in some of these areas than some other firms. Um, and then, once we kind of realize that, then some of those people who want to move into their second careers also want to become advisors. And now at this point, we've hired a couple other advisors, all multi-decade tech professionals, and that's kind of our niche now. Is we're former tech professionals and executives helping other current tech professionals and executives get the most out of their careers. And um, I think we find a lot of our clients are allergic to talking to financial salespeople, so they like talking to people that understand technology and how that works. Um, so yeah, that's our story. It's a work in progress, but we keep getting better at it, and we're seeing substantial growth, I think, just because we have that commonality with our clients.
Wow, Eric, I love that. I think that's a really great story. So worked in tech for decades and then realized that there's a problem. A lot of people don't know what to do with their money. So you're like, hey, they were coming to you. You like that. You were passionate about that or are passionate about that. And then
Yeah.
decided, hey, we got to set up a firm so we can get paid because that's the next step. And then time to leave the career in tech and move full time into finance. Is that more or less
Yeah,
the
100%. I was the guy, like, who knew all of the 401k plan options as they were changing. I knew all of our what sort of cafeteria options on our benefits plans, and was helping people make those decisions, like, just because I enjoyed it, and enjoyed sharing those insights. So yeah.
I love it. Okay, let's talk about the actual business, your investment strategy. You mentioned planning. Please let us know what you do and talk us through the strategy.
Yeah, I mean, we are financial planning centric, right? So I'd say these days, probably 80+% of people come to us and we do some form of full financial planning engagement to start things. Sometimes that is a little bit of a lot of people come to us for investments initially, and we have to kind of walk them through why it's important to do the financial planning first. It's really because we want them to have trust that we know exactly where their money should be going, right? So there's this, we need to understand who they are, where their assets are, what their goals look like, what their families look like. Because oftentimes it's not about getting just the highest return over a long period of time. Sometimes you need to set aside money for short-term or mid-term goals, and those are going to behave very differently, and you need to make sure that's accounted for. And so usually that process, that series of meetings is a time for us to really get to know who they are and what they want from their money. And then by the time we deliver kind of an investment proposal, it's reflecting back their values and what they want, right? And so that's an important piece. Um, that's where it starts. I would say what on the actual investment strategy side, what makes us unique is we're not 100% plain vanilla in terms of just being like cap weighted, low cost indexing. We offer that. I totally understand why that is a big thing and why many firms should offer that. We do believe in like low cost and diversified, but we also believe that you can beat the market over a long period of time, long enough periods of time. And in our personal lives, I mean, most of us, especially in the tech industry, most of the people who are coming to you with these concentrated positions or substantial wealth, they actually have beat the market over a long period of time. That's why they're asking for help in these areas. So what we do that's a little bit different is our core strategies are inherently more global than most. Part of that is just because we think that's the right thing. We don't think that the US will necessarily be the dominant, technical force in the world as it was in the last generation. And we're seeing like centers of innovation around the world pop up and be very competitive in AI. So you have China and Singapore and these biotech hubs and smart tech hubs. More and more, that's not unique to the United States. So that's part of it. We also obviously are playing into the fact that the US has experienced an absurd amount of growth since the housing recovery. So in the last 15 years. And when you look at most of the research from most of the reputable firms out there, the forward-looking sort of forecasts do paint a picture where more of the growth is not necessarily US large cap, right? So we're trying to skate where the puck is going. The other thing that being more global kind of allows us to do is offset what is an inherent bias in many of our client portfolios coming in. It generally takes us years to work through, a substantial concentrated position issue. And so having something that's more global is going to help counterbalance something that tends to be inherently very US centric. So for like details on our core allocation, the core allocation we're 50% US and 50% non-US. In the US side of the allocation, we skew a little bit towards smaller value kind of quality stocks. So we use some factor-based investing there. On the non-US side, we're actually equally split between developed markets and emerging markets. So that's a very rough outline. And we use these sort of data-centric kind of factor-based strategies. Largely, we use a company called Dimensional. Probably some of the folks on listening to this will know that firm because over a 20-year time period, roughly 80% of their strategies have beat their benchmark. The notable one that isn't in there, of course, is the S&P 500, which has crushed everything for 15 years. But even there, when you look at sort of the dimensional version of a large cap uh, benchmark, it's not very far off. It is negative there, but we see outperformance in most of the other parts of a comprehensive allocation. So that's part of our strategy, is like start with strategies that have been shown to beat the index over time in our core. And then we do tack on some little satellite pieces that are more, uh, you know, we do have some sleeved strategies around growth stocks. I kind of have a go anywhere more global stock selection sleeve. We have income and high yield strategies uh, for people with more like midterm goals. And then for people that really do want to crank it up and have a little bit of exposure to something a lot more aggressive, we have pulled in some crypto availability. Now, it's highly polarizing, but usually we'll start people with sort of a 2.5-ish% allocation, and we just put wider bars on it, so we let it roll a
Yeah.
little bit further. Yeah, which has been
Well,
great recently. That's really helped recently. Yeah.
no question. Bitcoin's almost at 100,000 as we speak, new all-time highs.
Holy cow, I hadn't even checked today. That's wild news. Yeah.
Yeah. So, all right, next question for you. How do you handle risk management, and what are some mistakes you see people make with respect to risk management, please?
Yeah, I mean, the most common risk management error we see in our business is over concentration. That's I literally had a call yesterday with a prospect that 95% of his net worth is in his employer stock, like literally 95%. That's as bad as I've seen, and that was yesterday. I have had 90% um, sort of concentration in the past with a few people, so just a little bit worse. Um, and I'd say, what makes those interesting and hard is that these people, the very reason they're coming to you is the success of those positions, right? And so it's very hard to say that like what got you here might not get you to where you want to go, right? That I was at Amazon when I watched it crater more than 90%, right? Back in 2000, and I saw the impact that had on people who were trying to stretch their incentive stock options to a long-term capital gain and paid a ton of AMT and then never made it up, right? Never recovered. So that's probably that's that's the biggest error we see in risk management. The other one we see quite a lot. We deal with a lot of very intelligent, highly educated, um, data-driven people, but we also see that there is some substantial group of them that comes in, and when it comes to their investing, they're like purely behaviorally driven and not in a good way. Like, a lot of them have done crazy stock picking with no overall look towards overall asset allocation or towards best practices. That's a little bit easier conversation because they're coming to you because it didn't work, right? So yeah, those are the two things. What we found is that especially with the concentrated stock position, that's where the financial planning piece comes in so heavily. Is when you map back, what that position looks like relative to the goals in their life. Most of them are already where they need to be, financially. And it's an anchoring problem where they're looking at, oh, well, the stock used to be at this price and I'm waiting for it to get back there. Or it's like oh, well, the next 10 million is going to get me X and Y and Z. And what you really need to do is say like, when you get to their financial plan, you say, yes, but you have children now and you have a house now, and you need to make sure that you can afford to send them to the schools you want to send them to, and you can help your elderly parents age, in their homes, or whatever it is. That's that's how we start to unlock that conversation a little bit, um, and get them to address it. It's a behavioral problem, not a technical problem at that point. Um, so that those are the most common kind of risk management things we see. But we do just to close this out, we do use sort of like the best of breed industry standard tools as well. So we do we use nitrogen, which used to be called Riskalyze. We set risk scores, and then we manage client portfolios to those risk scores at an account level. So we know when a client's account has drifted too far away from what we've set with them. So I mean that's the pat answer. I think the more interesting one is in that concentrated position space.
Yeah, no, it makes perfect sense. So I wrote a book. It's called Psychological Analysis, Eric, and it was #1 on Amazon. The idea is that fundamental technical analysis is not enough to beat the market. If it was, everybody would win. So as you're speaking in it, I talk about cognitive biases and mental walls and all these kind of fun things to help people really learn how to make rational, not emotional decisions with their money. If I hear you properly, it's almost like it's user error. You're a tech guy, so I'll speak tech language for a
Yes,
second.
that's
Where
true.
you buy
Yeah.
a printer and then you call customer service, it's not working. What's the first question? Is it plugged in? And for me,
Yeah.
it's like, oh no, it's not plugged in. There's nothing wrong with the printer. It's just user error. So I think if I hear you right with respect to not having a plan, being over concentrated in your employer stock, or thinking that what you did when you were 20 still works for you when you're 40 or 50 or 60, all those things that you mentioned and then some, those are all common mistakes that you see people make. And how to avoid them is by really trying to upgrade the user, if I understand you properly.
Yeah, I mean that's absolutely true. I think you kind of have to get them to list out what it is that's driving them. And oftentimes this is a discovery process, right? If they've been in a company that's been a rocket ship for 5 or 10 years, they have been heads down and not thinking about, you know, giving back or what they might need for the next phase of life that they want to get to. So sometimes this just takes time to work through, and sometimes it takes coming back to them multiple times and saying like, "Hey, I realize we didn't move this needle last time, but I'm going to keep bringing it up. Like quarterly, I'm going to reach out to you and I'm going to say, hey, I still think this is your biggest opportunity, and I definitely don't want to be somebody who I told you so later, right? I want to, and I'm not. There are all sorts of things we put in place to help them so that it's not like a rip off the Band-Aid. And, I'm not suggesting that anybody go sell a concentrated stock position tomorrow and take the tax hit. And in fact, there's lots of kind of sophisticated things you do to manage that tax efficiently. Um, but you got to get started, and you certainly got to stop making the problem worse at some
Yeah,
point. So, you just have to have that conversation.
I like it a lot. All right, beautiful. What are some timeless lessons you've learned along the way that you like to share with the audience?
Yeah, I mean, you'll probably hit it on this theme. And there's an anecdote. I originally heard it from, Jack Bogle, right? But about Joseph Heller and Kurt Vonnegut being at some party, and Kurt Vonnegut saying to Joseph Heller, like, "What's it? Why? How do you feel knowing that the guy who's hosting this party makes more in a day than you've made in your entire life um, on the royalties of Catch 22, which is a great book?" And Joseph Heller's like pithy response was, "Well, I have something that they'll never have." And the answer was, "It's enough, right? I have enough." And I think you know, that's become like a crucial theme. People just forget what it is that they're working for. So in my own like personal life, I had a tech career that was paying me many times more than I ever expected to make. I live in a nice neighborhood. My kids go to good schools. Um, but what I was seeing when my kids were really little is like this is the only time I can spend with them, right? And the kind of that COVID, um, that year of COVID, I was like, this is great. I want to continue being here for them, and I can deal with substantially less. I've built my life in such a way that I kind of have what I need, and everything from here is upside, right? And so, thankfully, I have a very supportive wife that also feels similarly. And when we talked about me either sort of staying with the startup where I was at or moving to doing this full time. She was very supportive. She's like, this is where your heart is. This is what you love. I can pick up extra nursing shifts. She's a nurse and cover benefits for a while. Um, and that was my version of enough. But I think, the other advisors I've hired in recently, they have that same thing. And one thing we've learned from working with lots of tech professionals is nobody wants to work in tech until full retirement age. Like it's crazy. From the outside, people look at tech professionals and they say, "Oh my God, you work at Alphabet or Meta, you have it made. You have great benefits. You make great money. You have a large stock options account." And that is true. But what you give up is you're always on call. You're always at the beck and call of the company. You're always going to be subject to reorgs. You're always going to be moved around. You're going to go through periods that aren't so happy. And and so yeah, I think a large part of what we do is just trying to help people understand when they have enough and understand when they can make a switch to something that's more meaningful to them. The couple of advisors we've hired, that's definitely where they're at in their life. They had enough, not in a bad way. They had enough to make a leap into that next phase and to get excited about helping other people. And I think that's sort of the macro version of what we do with all of our clients.
I think that's very, very powerful that, fulfillment people talk about or having enough, that inner satisfaction is huge. And I know that you mentioned Bogle and Vonnegut and all this kind of stuff. For the audience, Bogle was the guy who made Vanguard. He was
Yeah.
all these indexes and low cost mutual funds and ETFs. So he's really one of the godfathers of that space. And he's a financial advisor. So as you were mentioning it,
Yeah.
you're saying okay, you took a temporary pay cut, but there's a very high likelihood you continue on your path, you're going to make a lot more than you did heck.
It-
Why not?
it's
So
it's
stay
it's looking likely at this
doing the
point
right
that
thing.
will be the
Yeah.
case. Yeah. Yeah.
Okay, beautiful, Eric. So and then on top of that, you've got the fulfillment. So that's really fantastic. And that's priceless. So how about timeless mistakes? What are some timeless mistakes you see people make and how do you avoid them?
Yeah. That's a great question. The most frequent mistake I see people, kind of have, especially early in their career, is to get caught up in this feeling that it's a competition. And we all write our own narratives in reverse, and there's a healthy way to do that, and there's a negative way to do that, right? If you get passed over for a job, a negative way to do that is to degrade the person who got the job, or assume that there's some other factors at work beyond talent or intelligence. Um, but if and then the more positive way is to be reflective and just understand that, like, look, even if it was a mistake that the wrong person got promoted, what are the things I can do to stand out so that the next time this happens, I'm in a better position to make my case, to be the obvious choice. Um, the problem with the cynical side of it is, especially when it runs unchecked for a long time, is people just become more cynical over time. I'm a big optimist. I'm always looking towards the future. My wife calls me a Labrador because she says, like, no matter how hard I get hit, no matter, I had meetings with Jeff Bezos that were incredibly difficult. I had uh, meetings with other executives. Sometimes over a long career, you're going to get smacked back, and it's really how you bounce back and respond that dictates where you go from there. And I'm just lucky that I'm kind of like one of those inflatable dolls you knock down and it just pops back up. That's that's kind of my personality. But yeah, the people that I think turn that into cynicism, and the sense that they're owed something, those are I think are the timeless mistakes. I mean, you build your own mental framework in this world, and if you build a negative one, you'll never be happy.
I absolutely love that. Optimism is one of the golden threads that runs through the show. I ask everybody these questions and I don't think I've had one pessimist on the show. I don't
Oh,
know for
good, good.
100% certainty, but I'm almost 99% certain there hasn't been one pessimist, or at least they haven't vocalized that to me. Actually, you know what? I'm gonna go out there and say there has not been one pessimist on the show that's actually told me, hey, be pessimistic. It's a better way than being optimistic. So I absolutely love what you said, Eric.
Yeah, I appreciate it. It's funny. I only started going to conferences, like financial conferences, a few years ago when I went full time. And it was funny because I went to the first one was Future Proof down in Huntington Beach. And all these people around me were saying like, "Oh, you're going to be successful. You're here." And I was like, "That's not all it takes." And they said, "No, but everybody who's not interested in improving, they're not here, right?" So it's just like you just got to show up and you got
Yeah,
to surround yourself with other people that are trying to improve. And you know what? You'll kick and scrape your way to success.
yeah,
The,
fully
the,
agree.
yeah,
Okay, final question for you, Eric. What is the best piece of advice you'd like to give the audience or give your 30-year-old self?
boy. Okay, I think those would be slightly different. Like to my 30-year-old self, I would probably say just focus on optimizing for learning, right? And putting yourself in a position to execute, um, learn new things, build trust with people, right? When you're junior in your career, um, that's all you're looking to do. I think the biggest piece of advice I have, and this is just like looking in the rearview mirror, I did not realize that the network of trust that I built over 23 years was going to be the foundation of this business. I never considered, even in 2017 when I started this, I did not know that I would end up serving tech professionals that were my colleagues as the focus. I did not know if it was going to be friends and family just kind of referencing people in or what. And so, you know, I think building that network of trust, doing what you say you're going to do, and then everything that's meaningful in life comes from working with other people. Like none of this can be done on your own. And so if you focus very early on, initially as being a great teammate, and eventually being somebody who's like actively looking to improve the teams you work with, you are going to end up in a very good place and in a very powerful place. And I still like it shocks me every day. I originally thought when I started this business that um, most of my clients would be pretty heterogeneous in the problems. And I know I've talked about concentrated stock a lot being one of those problems, but everybody's version of it is different. And the tools that they need are very different. And what I find every day is that whenever I find some unique use case I've never dealt with before, I have all these industry contacts now and experts I reach out to who will just help, and if I were not out there going to these conferences and meeting with these people and looking at all these new technologies and looking at the entire space, um, I think I would be underserving my clients. So I think it's about building that team, helping each other out. Certainly, I try to help everybody that calls me, um, regardless of if we're doing business together or not. I want people who are earnest about getting to the next place in their life. I want to help. That's kind of where it starts. But yeah, I think that's it. It's understand, be a trusted teammate, and start to proactively build your network in a way that helps you get where you want to go.
I love it. Well, Eric, thank you so much for taking the time. This has been fantastic, and hopefully we'll have you on again soon.
Yeah, thanks so much, Adam. I appreciate it.